Hello, hello. Okay, I can hear myself. I can see the screen. Everything looks good, right? Okay, so you guys should be able to see on the screen the dollar's dominance, DXY, BRICS, and the de-dollarization. Okay, if you cannot see that, let me know. It should be there. Speaker Sandra, which is me, and today's date, the 28th of October. Okay, I'm gonna start today's session. Yeah, I'm gonna start today's session. Let's do this. Okay, so hey everyone, welcome to today's exclusive Vantage webinar. Okay, we're gonna do the dollar's dominance again. Why the US dollars have been so strong for so long. We're kind of gonna understand it a bit. I'm not gonna go in too much detail because if I go in too in depth, I don't think I will be able to cover the whole thing in 1 hour. Rather, I'm just gonna touch on the idea so you have like kind of like a rough idea on why the US dollar is so dominant. And then later, what I really want to do, and I think this is what you guys would want to do as well, is later on, I think we can, if we have enough time, to go on to the live charts, and I will show you the US dollar pairs and the DXY and what we can look out for. Okay, I think that is something you guys would much prefer. So before that, I do want to find out how's everyone doing? Okay, where are you guys tuning in from today? Drop your country, your city in the chat box. I always love seeing a very global audience. Okay, we usually have traders from Europe, Asia. I think the last time there was Mexico as well. Pakistan, nice. Hi. Vietnam, Indonesia. Nice. Philippines, nice. Australia, Norway. Wow, nice. That's really far away from me. I am based in Singapore, by the way. It is 5 p.m. Well, 5:07 here in Singapore. Okay. And oh, Middle East. Okay, so today's webinar, as all my webinars, I would want them to be a bit more interactive because you know the whole point of Vantage bringing these webinars to you guys is so that you have a place to bring up like all the challenges that you're facing or whatever it is that you're confused about. Just ask in the chat box and I'll do my best to answer you, okay? If I have the answer, right? Is Trump still there? Yes. No, Trump was in Malaysia, right? Yesterday. Trump left Malaysia today, or is it yesterday? And I think he's in Japan right now. But yeah, I am in Singapore, which is next to Malaysia. If we drive, I can drive into Malaysia in like half an hour, or maybe less if I'm just next to them. He is the market maker nowadays. He is. A lot of things that he says will move the market. Okay, so again, don't be shy. I like that how Anwar is interacting with me. I like that how you guys usually interact with me. I like Irma, Karsten, Yula, you guys are interacting with me a lot. Muhammad, Brian, Andy, you guys talk to me a lot on these webinars. And I like that because it's also not as boring for me. If I'm just like going through the slides, it's very dry for me as well. So do talk to me so that this hour can be a little bit more fun. Okay. Okay, so let's go into today's topic. Over the next 1 hour, we'll unpack how the US dollar has been so strong for so long, okay, and what causes those explosive moves and how you as a trader can turn that volatility into opportunity. Okay, so if you guys are ready, let's get started. Oh, yes, sorry. Anytime we do these webinars, you guys know that we have to do this disclaimer part. Okay, so I will have to stay here for a minute or two so you guys can read through the disclaimer. Okay, but just a reminder, basically the disclaimer is to remind you guys that this webinar is for educational purposes only. Everything I'll share today is based on like anything that is I share, whether it's analysis, observation, or whatever information I share, please just take it as purely educational. Please don't be like, that Cassandra girl from that Vantage webinar told me to do this. Okay, this is not that kind of place. Okay, I am definitely not a signal service or any form of financial, and I am not giving any form of financial or investment advice. The goal here is to help you understand why the markets move the way that they do, okay, and how you can apply that understanding when trading with Vantage. Okay, trading always involves risk, especially when dealing with volatile assets like oil or sorry, commodities or forex. Okay, not just oil, it's all. Okay, so make sure you trade responsibly, manage your exposure wisely, and use today's insight as part as your own informed decision making. Okay, just another quick reminder, trading forex and CFDs, especially if you are trading on margin, carries significant risk and may not be suitable for all investors. You may lose more than you intend to. Okay, so yeah, that's that. I'm going to introduce myself. My name is Cassandra, for those who don't already know me. Okay, you guys can call me Cass. I am an investment analyst with Everest Fortune Group. So Everest Fortune Group is a research firm that is based in Singapore. Okay, what do? We focus a lot on like back testing, forecasting, a lot of like market research, analyzing where we think the markets are going. Okay, we have been the finalists for the best Forex and the best equity research for multiple years running. So we basically just study the markets thoroughly. On top of that, because I study the market so much, right? Obviously, if you study something so much, you're going to get very used to it and you're going to understand it very well. So I do understand the markets very well, to the point that I have been a certified prop trader many times. For those who don't know what prop trading is, it basically requires a trader to take a few tests, and that test usually makes you do a percentage in profit within a month. So for me, the test that I took was 10% profit within a month. I've passed these tests like 5 times now. I would say 10% profit for me is not a very hard thing to do, because I have strategies that I use and trading styles that I use that have been working for me. Okay, may I know your Telegram group to join? I don't have a Telegram group. I don't do like those signal groups or like whatever groups. Okay, I don't do those, but yeah, I'm just here to help Vantage do this webinar. So the brokers will invite us, our research team from Everest Fortune Group, to do these educational webinars for you. So again, because we are a third party research firm, if you guys ask me anything to do with the back end of Vantage, like how do I get the recording for this, the best is to email Vantage to get the recording. I personally would not be able to email it to you guys, so please email Vantage directly and they will be able to assist you with whatever you are facing on their platform. Okay, yeah, so our agenda for today will be why the US dollar is still king. Okay, because it is the reserve currency currently. DXY and its key component, EUR, JPY, GBP, the rise of BRICS currency blocks. Is it a threat or a hype? And trading the US dollar strength versus slash weakness through major pairs. Okay, I think you guys are going to like the last part. I believe a lot of you are always asking me to share my strategy of how I became profitable in trading. It's just that every time I'm doing this educational webinar, I don't really have time to go into the charts to show you guys my style of trading. But today, if we have time, if I finish a bit earlier, we might be able to do like 10 minutes on the charts, okay, hopefully, if we end everything in time. Okay, so why is the US dollar still king? Well, because it is the reserve currency. Okay, so all right, let's kick off with the big question again. Why is the US dollar still the king of the global financial system? Just so you guys know, I want to make it a point for you to understand that US dollar is king today. Okay, I want you guys to know that nothing lasts. There is nothing that lasts forever. Today, it may be the US dollar. In 100 years from now, it may be something else. But in this decade, it is the US dollar. So why? It's because you've probably heard people say the dollar is losing power. or the BRICS will replace the dollar. Okay, but let's strip away the noise and look at reality. Okay, the dollar is everywhere. Okay, over 80% of global trade transactions are settled in the US dollar. It is the highest traded currency in the world. Okay, so if people are saying the US dollar is weakening, maybe it is, but as of right now, as of today, it is still the 80% of the global trade transacted in the world. Okay, that means when Saudi Arabia sells oil to Japan, when India buys gold, when Indonesia imports machinery, the invoice is usually in US dollars. Okay, why? Because the dollar is the most trusted, most liquid, and most stable currency on planet Earth at this current point of time. I have to keep saying at this current point of time. Why I'm so like specific about it being this current point of time, because I've recently been doing a lot of research on the Singapore dollars, which I have mentioned many times in my webinar. And Singapore dollars is actually the strongest growing currency at this current point of time. There is no other currency in the world right now who has been growing at the rate of the Singapore dollars. And the Singapore dollars is expected to be as strong as the US dollars by 2040. Okay, so that's why, although today's topic is on US dollars, I'm going to keep emphasizing that at this current point of time, the US dollar is the strongest player in the market. Okay, so central banks, the big players like the European Central Bank, Bank of Japan, and the People's Bank of China hold over 60% of their foreign reserves in US dollar. The euro is second, but far, far behind. Okay, you guys can see 6.8 trillion of US dollars is being held in reserves, whereas the euro is only 2.3 trillion. That's like 1/3 almost. Okay, so think about it, right? It's not just a habit, it's a combination of, the US dollar. Okay, it's not just a habit, it's a combination of stability, deep liquidity, and global confidence. So if you guys really, really think about it, if you're a central bank managing hundreds of billions in reserves, where would you park your money? Okay, somewhere you can move billions in and out. Sorry, I saw the chat moving. In reserves, where, okay, billions in and out instantly without crashing the market. That's the US Treasury market, the most liquid market in the world. Okay, even during chaos like wars, pandemics, or banking crisis, the world runs to the dollar, not away from it. That's why we call it a safe haven. When the global system shakes, the dollar strengthens. People sell emerging market assets, convert to US dollar, and buy treasuries. It's not patriotism, it's practicality. Okay, so let's be honest, the US economy, for all its problems, okay, still represents nearly 25% of global GDP. Okay, its bond market, its capital markets, and its financial institutions still anchor global finance. So yes, while the dollar might fluctuate in value, its dominance remains because it's built on trust, habit, and network effects. Once the world builds a system around you, pricing, debt, oil, trade, it's incredibly hard to replace. That's why even as other blocs like Brexit talk about alternatives, we're still living in a dollar world, okay? And likely will be for a long time. Maybe, definitely, I think in my generation, it's still going to be the dollar. When my grandkids or my great-grandkids, I don't know if it's still going to be the dollar, but at this current point of time, I believe it's still going to be the dollar. It will take a while before other currencies, if other currencies are trying to catch up or take over, it might take at least 100 of years, I think. Okay. So, oh, sorry. Give me a moment. Give me a moment, guys. I think I accidentally messed up my slides. How did that happen? Sorry about that. Okay, so to really understand why the dollar is still dominant today, we've got to travel back in time all the way to 1944, right after World War II. The global economy was shattered. Europe was rebuilding. Okay, so this was like, yeah, World War II. Okay, and countries needed a stable reference point to trade and finance. So a little place called the Bretton Woods in New Hampshire, the world's major powers came together and said, let's make the US dollar the center of the system. Why? Because at the time, the US controlled 2/3 of the world's gold reserves. The deal was simple. The US dollar would be pegged to gold at $35 an ounce, and every other currency would peg to the dollar. Okay, you guys see how this works? That system builds enormous trust. The dollar became as good as gold. Then in 1971, President Nixon shocked the world by ending the gold standard, meaning dollars were no longer convertible to gold. You'd think that would destroy trust, right? But instead, something even bigger happened. The petrodollar system was born. Okay, the US made deals with the oil producing nations, particularly Saudi Arabia, to price oil exclusively in dollars. Okay, so that was a really good move for the US to do that. Okay, so even if France, India, Japan wanted oil, they needed dollars to buy it. That meant that every country needed the USD reserves. This creates a permanent global demand for the dollar, enforcing its dominance even after it stopped being backed by gold. So from that moment on, the US dollar wasn't just a currency, it became the foundation of global trade and finance. And over the decades, this dominance snowballed. Global debt, commodities, even cryptocurrency pricing all default to the US dollar. Okay, it's not just about America's power, it's about the system that formed around it. Once a network becomes that large, with trillions circulating every day, it's nearly impossible to unplug it. Okay, it's gonna take, it's very hard. I think China is trying, right? China is trying, but it's still going to be very hard. Okay, so even today in 2025, okay, the global dominance of the dollar is not just about America's GDP, it's about infrastructure. Okay, every financial system in the world connects somehow to the US system. Global payments flow through SWIFT, a system largely governed by Western financial standards. Central banks rely on USD liquidity during crisis, like COVID. For example, when the Federal Reserve opened dollar swap lines to stabilize other currencies, the US Treasury market remains the largest and fastest place to store wealth. In short, the dollar's power isn't about money, it's about trust, transparency, and access. Okay? Access. Okay, so other countries can build alternatives, but it takes decades to replicate the ecosystem. That's why I say in my lifetime, I don't think any currency will overtake the US dollars as being the world's largest reserve. I think that China is trying, but probably not anytime soon. And that's why the USD remains the anchor currency of the world. It's not just a financial tool, it's the operating system of global market. Okay, so when I say China has been trying, I don't know about if you guys have ever heard this thing where China goes around the world building roads and building constructions. Okay, so for example, they go to India. This is just an example. Okay, I don't know if there's really a case like that. Okay, I know this for sure happened. Okay, they go to Malaysia, for example, and they're like, okay, I'm going to build this road for you, or I'm going to build this building for you, and in return, you need to pay me, but you need to pay me in the Chinese yuan. Okay, so they are trying to boost up the usage of the Chinese yen as well. This is to strengthen the yen currency and to increase the reserves around the world. So there are other currencies trying to fight the US dollar, but I don't think it's going to happen anytime soon. Okay, so DXY and its key components, EUR, JPY, and GBP. Okay, all right, now let's talk about why the dollar rules the world. Let's get into something even traders should understand, the dollar index or the DXY. Okay, can you guys let me know in the chat box of how many of you actually do your analysis on the DXY? I personally do my analysis on the DXY whenever I am trading any kind of US dollar currency. I will go on to the DXY to kind of have a rough idea of what's happening in the markets. Okay. Not sure what DXY is. Okay, cool. Totally understandable. So if you ever wonder, is doing it lately, but not at the beginning. Yeah, I guess a lot of new traders, beginners, wouldn't know to go and look at the DXY. But I can tell you, using the DXY as a reference will help your analysis a lot. Okay. So if you guys have ever wondered, is the dollar strong right now, or why is EUR USD and GBP USD dropping, or for example, okay, you're basically talking about DXY, even if you don't realize it. Okay, so what exactly is DXY? DXY is the US dollar index. Okay, it is basically an index. It is like a thermometer for the dollar's health. Okay, it measures the USD against a basket of major world currencies, kind of like an average report card of how the US dollar is doing right now. So DXY was created in 1973, right after the Bretton Woods system ended. It started with a base value of 100, meaning that's the reference point. If the index is above 100, it means the dollar has strengthened compared to where it started. If it's below the dollar has weakened. Now, here's what most traders don't realize. The DXY is not equally weighted. Okay? Oh, I have to tell you guys this. Okay, so if you guys have been following me for months, you know that before this, I used to do my webinars and my topics used to be a lot on technical analysis, right? I think Eula, you've been following me for a while now, Carlston, Andy, Joash, Muhammad, Bob, Brian, you've been following my webinars for a while now. So if you guys remember, when I just started taking you guys, I did a lot on technical analysis because I consider myself a technical analysis specialist. Okay, so I do a lot of how I make money in the markets is through technical analysis. So I don't really read the news that much. I don't really understand the economy so much as a whole, other than technical analysis, because technical analysis has been enough for me to make profits in the market. So recently, in the last few weeks, right, Vantage has requested that I do not so much of technical analysis and I do more on this kind of fundamental topics on the economics side and on like microeconomics, macroeconomics, geopolitical tensions going around the world and whatnot, understanding different kinds of currencies. Okay, so when I'm doing all this, I actually have to do a lot of research before I can do these webinars for you guys, right? And I myself am learning so much from doing these webinars for you guys, and I love it. I love the information that I'm getting. So yeah, so It's good. It's good for me and it's also good for you guys. But I give you guys the very summarized version of what I research on, to be honest. Okay, yeah. So most traders don't realize this. So I myself only realized this after I did research on the topic that I have to like share with you guys. Okay, so most traders don't realize it, but the DXY is actually, like I said, not equally weighted. It's dominated by just a few key players. Okay, so they don't weigh the DXY, they don't weigh the US dollar against like all currencies out there. They don't weigh it against like the Russian ruble. They don't weigh it against Australian dollars, for example. Okay, the euro, the yen, and the pound. Okay, the euro, the yen, and the pound is what they weigh against. So even though it's called a global index, it's really more of a Western currency index. When you see DXY moving up sharply, it's usually because the euro, which makes up the biggest chunk, is falling. Okay, so the DXY has a lot to do with euro. Okay, so if you are trading EURUSD, for example, you should definitely reference DXY because it should be going the other direction. EURUSD is kind of like trading USD EUR if you're referencing the DXY, if you guys understand what I'm saying. So when you are thinking of DXY, just think of it as it is a comparison of the US dollars to Western currencies. Not so much of other things, okay, to Western currencies. So the beautiful thing is, I mean, not really so much of Western currencies because it's also Japanese yen is also in there, okay? But the beautiful thing is if you trade like EURUSD, GBP USD, or USD JPY, you're already trading the major pieces of the DXY, whether you know it or not. So as a trader, understanding the DXY is like having a compass. It tells you where the tide of US dollar strength or weakness is heading and which side of your trades you should be on. Okay? Okay, so let's break down a little more. Okay, because this is where it gets juicy for traders who didn't know this beforehand. The DXY is not balanced like a salad bowl. Okay, it's more like a big bowl of Euro soup with a few toppings on top. Okay, the Euro makes up almost 58% of the DXY's weighting. That means more than half of the DXY movement or momentum comes from whatever the euro is doing. Okay, next come the Japanese yen at about 13.6% and the British pound at 12%. Okay, about 12%. Okay, after that, a smaller place like the Canadian dollars make up about 9%, the Swedish krona at about 4%, and the Swiss franc at around 3%, 3 to 4%. Okay, now think about this. If the euro suddenly weakens, maybe the ECB signals rate cuts or Europe faces a recession, the DXY will likely spike up even if nothing changes in the US economy. Okay, that's why you'll often see EURUSD falling while DXY rises or vice versa, okay? Because they are inversely correlated. DXY is inversely correlated to EURUSD. So if you guys are one of those people who have attended my live analysis session, I don't think any of you have attended my live analysis session. I love trading EURUSD. In fact, I am currently in an EURUSD trade right now. And every time I do a EURUSD trade, I will reference DXY. I'm currently in 2 trades right now. I am in EURUSD and I am XAUUSD. Okay, I am selling both. Wait. Yes, I am selling both. Okay, yeah, so as a strong dollar means a weak euro and vice versa. And this is super important if you trade the EURUSD. It's basically a mirror image of the DXY. Traders often use DXY as a confirmation tool. For instance, if EURUSD is approaching support but DXY is breaking resistance, that's a strong clue that the euro might keep falling. Okay. If DXY is topping out and showing bearish divergence, that could be a hint that US dollar pairs may soon reverse. So by watching DXY, you're not just looking at one pair, you're seeing the entire dollar story play out across the board. Do you look at DXY only for EUR/USD or other currencies in this index? I only use it for EUR/USD because I feel like the other currencies do not weigh as much as the euro. Therefore, the information that I'm collecting on the DXY may not be as accurate as if I am using it to trade the EUR/USD. I hope that answers your question. Okay, so now let's talk about how traders actually use DXY. Yeah, definitely only use it for DXY. I mean, that's my own personal experience. I don't know about other traders. There may be other traders out there who are profitable, who are using it for other currencies, but I personally only use it for the EUR. Okay, so not just to sound smart, but to make real trading decisions. Think of DXY as your anchor for buyers. It's not something you trade directly most of the time, though yes, you can, but it's something you refer to constantly. So DXY is always a guide. Okay, it is always a guide, but it's not something you trade. I don't even know if you can trade DXY. You cannot, right? I don't think DXY is, I personally have never traded DXY. I don't think any platform even offers DXY as a something that you can trade. But yeah, but it's something I do reference a lot. So when DXY is trending up, it usually means the US dollar is getting stronger. You'll often see the EUR/USD and GBP/USD dropping because the dollar is overpowering those currencies. When DXY is trending down, it's the opposite. The dollar is weakening and the USD pairs tend to rise. So before you place any trades involving the US dollar, just take 30 seconds to look at DXY charts. That's how much I take. I take like a minute at least, like just a quick minute to just quickly glance at DXY to see what's happening. If DXY is breaking out, don't try to fight the trend by buying EUR/USD. That's why swimming against a current is dangerous. Smart traders align their trades with DXY momentum. And here's a pro tip. When DXY moves strongly with big macro events like NFP, the non-farm payroll, CPI or FOMC meetings, it often sets the tone for the entire week. Okay, again, like I said, I am a technical analyst. Okay, I trade a lot on technical analysis. So while I'm doing a lot of this research for you guys, right, that's when I realized, oh, okay, I should actually still reference the news if I can, right? Referencing the news will actually also help my trading become more accurate. Maybe I will encounter less losses if I try to combine news trading into my technical analysis trading. Okay, so other than NFP, CPI, or FOMC meetings, okay, it often sets what's going to happen for a week, and it's important. Like, if you can follow the news closely as a trader, you should, if you can. Okay, but for me, I cannot. I try my best to, but I cannot. Okay, my lifestyle wouldn't allow it. Okay, so for example, if the CPI comes out hot and DXY breaks resistance, you'll likely see a sustained USD strength across all major pairs. So if DXY helps you zoom out, it's like having a radar showing you where the wind is blowing, okay, in that currency world. Combine that with your technical setup and your trading becomes much more intentional, not just reactive. Okay, so the rise of BRICS currency blocks, is it a threat or just a hype? Now let's dive into BRICS. Everyone's talking about it, and as traders, we need to know whether it's a real game changer or just political hype. BRICS, which stands for Brazil, Russia, India, China, and South Africa, these countries have huge populations, big natural resources, and fast-growing economies, especially China and India. Lately, there's been chatter about BRICS creating their own currency system or trading more with each other in local currencies rather than the US dollar. At first glance, this sounds like it could threaten US dollar's dominance, but here's the reality. most of this is still political signaling. Okay, it's a way for these countries to say we have alternatives if the dollars become inconvenient. I am going to use another currency if the US dollar becomes inconvenient. Okay, so as traders, we don't panic, we watch this closely. Okay, even just the discussion around BRICS can affect currency flows, capital movements, and emerging market sentiments. Okay, now let's talk about what this could mean for markets. If BRICS countries start using more local currencies among themselves, it could gradually reduce USD demand in those regions. That might put a very, very slight downfall on the US dollar pairs, but it's not like the dollar loses its global reserve status overnight. Far from it, right? It's going to take years, decades, centuries even for traders. This is very interesting because any news or statements from BRICS meetings can spark volatility in emerging market currencies. So imagine the USD ZAR, the USD RUB, or the USD INR. This could swing on headlines even if the fundamental economic impact is still small. And here's the tip. If the BRICS currency isn't real yet, some traders start positioning based on expectation. Markets move on anticipation, not just reality as well. So even if it's not really happening yet, right? Just speculation is enough to kind of move the markets in one way or another. Okay, so what does this mean for your trading? Okay, that's all we want to know, right? Does all of this mean for our trading? First, remember that DXY still rules the world. Okay, USD strength or weakness will dominate your major trades. BRICS headlines create short-term volatility. It's very short-term. It's as if it doesn't really affect at all. It still affects, it's more like a pinch, okay? Especially in emerging market currencies. A practical strategy, monitor news flow from BRICS meetings. If there's talk of bypassing US dollar in trade agreements or creating joint settlement systems, you might see spikes in currency volatility or commodities linked currencies. But don't overtrade. This is a long-term trend, not a sudden shock. Think of it like a slowly rising tide. You're looking for opportunities in emerging market currencies or assets that are BRIC linked, but always in the context of overall dollar strength. So basically trade the dollar first, then layer BRICS related adjustments on top. That keeps your approach structured and prevents you from getting caught in hype cycles. Okay, so I'm going into the last part of this webinar, and then I think we'll go into that part where I believe you guys would want to see, which basically is me going onto the charts and showing you how I usually trade. For the purpose of today's topic, which is US dollars, we will be focusing on US dollars pairs. Okay, let's get into the juicy part. Trading the USD itself, I want you to think about the dollar like the heartbeat of global Forex. If the dollar sneezes, the whole Forex world reacts. So understanding when it's strong or weak is absolutely critical. First, let's define it clearly. USD strength simply means the dollar is appreciating relative to other currencies, which usually happens when US economic data looks strong. Fed rates are rising or investors flock to the perceived safety of the dollar. USD weakness is the opposite. Maybe the Fed is dovish, inflation is under control, or there's global risk appetite, So traders move money out of the USD and into higher yielding or riskier currencies. Here's the key takeaway for traders. You're not trading currencies in isolation. You're trading the dollar's relative strength. For example, EUR/USD doesn't just move because the euro is strong. Often it moves because the dollar is weak. USD/JPY doesn't just move because the yen is weak. It often reflects dollar strength. This is where the DXY comes in. It's your North Star. Track the DXY daily, weekly, and monthly. When the DXY is trending up strongly, your bias should naturally favor long USD trades in favor of like USD/JPY, USD/CHF, or USD CAD. When the DXY trends down, look for USD positions or long trades in EUR/USD, GBP/USD. Okay, you can also, like I say, I personally only focus on EUR/USD, not so much on the other currencies, but you can also look at Australian dollars and New Zealand dollars, okay, on top of the Canadian dollars and the Swiss franc, although it's very small, relatively small compared to the EUR. Okay, so now let's break it down pair by pair because each behaves slightly different depending on USD strength. Okay, so let's start with USD/JPY, for example. Japan is heavily export orientated. Okay, and their interest rates are usually super low. When the dollar is strong, USD/JPY tends to rise sharply. Traders often use the proxy for dollar strength. Similarly, USD/CHF often mirrors risk. Okay, sentiments, and the Swiss franc is a safe haven currency. So a strong dollar against CHF usually means global risk off or the Fed is dominating the sentiment. When we have commodity linked pairs like the USD CAD, which is not in that picture. Okay, Canada exports a ton of oil, so the Canadian dollars is very sensitive to oil prices. When USD rises, Canadian dollars often rise, but if oil also spikes, sometimes that can counteract dollar strength. This is why I always say context is important, context is king. You have to look at the US dollar bias and pair specific drivers. Okay, on the other side, growth currency like EUR/USD, GBP/USD, AUD/USD, and NZD/USD. Okay, these tend to move opposites to USD strengths. If the dollar weakens, these pairs usually rise. But remember, these are also affected by European, UK, Australian, and New Zealand central bank policies. So it's never just a dollar story, okay? You need to reference other things. Context is really king. Here's a pro tip. Use the DXY first, then look at the individual pairs. Don't try to guess a pair direction without understanding dollar bias. It saves you from overtrading and getting whipsawed by conflicting news events, okay? So let's talk about actual strategies you can use in your trading. First, always start with the big picture. Is there a dollar generally strong or weak? DXY trends analysis is your foundations. Then layer it with pair-specific context. For example, if DXY is trending up strongly and you see USD/JPY breaking key resistance, that could be a solid long USD/JPY trade. Use stops and proper positioning sizing. Don't just pile in because the dollar feels strong to you. Markets can be whippy, especially around news. Speaking of news, okay, the US economy calendar is your best friend if you are a fundamental trader. Non-farm payroll, CPI, Fed announcement, these are the massive USD catalysts. Knowing the timing can make or break your trades. Also be aware of risk on, risk off sentiments. Sometimes the dollar moves not because the US economy is stronger, but because investors are fleeing risk. That's why pairing DXY analysis with sentiment indicators like VIX or emerging market flows can give you a huge edge. Finally, don't just blindly follow the trend. Look at correlation. Correlation is so important, guys. For example, a rising USD often pushes gold lower, okay, and commodity linked currencies weaker. If you understand these relationships, you can position trades across multiple pairs and instruments simultaneously, giving yourself a more consistent edge. So the main takeaway here is trade the dollar first, trade the pair second. Okay, and always respect volatility. Treat the DXY as your North Star, and the rest of the market will start making a lot more sense. Trust me, once you internalize this approach, your trading becomes more confident and structured. Okay, okay, so I'm done with today's slide. As expected, I still have about 10 more minutes. Let me just pull out a trading view so that we can go through today's topic, which is basically DXY. Okay, give me a moment, guys. Not ChatGPT, there you go. Okay, I am on a free account, so please mind me if I cannot. Please mind my account if I cannot pull out stuff. US dollar index. So this is the one that I'm talking about where you can kind of do your analysis. I have been looking at it for a while. It kind of looks like it's so it was going down for a while. Let's start with the weekly, okay? If you look at the weekly, it has been on like this downtrend here. It broke this major structure here. It broke this major structure and it now made a low. Okay, so when I see this, honestly, as a technical trader, as a structural, like I like to look at price action. If I see price doing this, it means that price was so strong that it was able to break a structure. It makes me concerned that it might go even lower. Okay, so I would say on the very long term, on the weekly chart, which is on a very long-term basis, it looks like the DXY has a lot of bearish momentum. Okay, there's a lot of downwards momentum at this current point of time. Okay, but if we are looking at the daily, if we're going down the time frames, you can see that it's kind of losing momentum in terms of like weaknesses. So I would say, what constitutes a downtrend? So what constitutes a downtrend is very simple. You basically need lower highs and lower lows. Okay, although if we zoom in and look closely, DXY is definitely still making lower lows and lower highs. Okay, can you guys see that? It's definitely still making lower lows. I mean lower highs. Okay, but is it making lower lows? You can see that the lower lows have kind of weakened. It's not as strong as it was when it was like doing this free fall here, right? So you can say that in recent times, in like September-ish, the dollar is still weakening, but it's weakening at a much, much lower rate. So I would say this is still a lower low if we kind of zoom in. You zoom in, it's definitely still a low because the low stopped here. Okay, this is where the low is, and the last low was here. So it's definitely still making a lower low. It's just that it's losing momentum. Okay, so my question now is, if it comes back here the fourth time, another time, will it be strong enough to push down lower or not? I don't know. We will see. Okay, so we will see. This takes time. We need like the charts. It will take time for us to look at this. So now that we kind of have a rough idea of where DXY is going, DXY looks like it is becoming a little bit, it is bearish, but kind of losing momentum, right? Let's go and look at other pairs. Now we have an idea of what DXY is doing. Now I can go look at other pairs. So the two pairs that I am currently trading, right, is number one, ETH/USD. And number two, EUR/USD. Sorry, not ETH/USD. I'm trading gold at this current point in time. Let's look for Vantage. Is Vantage on TradingView? I actually don't. Oh. Oh, there you go. Vantage is here. So you want to, if you are using Vantage to trade, you want to choose Vantage to do your analysis on, because the spreads and the prices will be the same. Okay, the spreads and the prices will be the same. Okay, yeah, I'm gonna get rid of this. And same for XAUUSD. You want to look for the Vantage. There you go, this one. Okay, so why am I selling the XAUUSD even though DXY is showing strength? Okay, first of all, remember what I said in the past hour. Context is king. Please remember, context is king. DXY is a reference to, again, let me pull out my side. I need to pull it out so that we remember. To the Euro, JPY, GBP, Canadian dollars, SEK, and basically a Sweden, and the Swiss franc. Okay, this is the context I'm talking about. Why am I selling gold even though DXY is also dropping in? Looks like it's on a downtrend. Okay, even though DXY is on a downtrend, why am I selling gold? Why am I going the same direction as DXY? Because this pair, this DXY is a index, it's a thermometer for these currencies, right? These currency, it is not an overall thermometer for all commodities, not an overall thermometer for all currencies. Okay, that's why I am selling the USD, XAU USD, because of that, why I'm not referencing so much on the DXY. Okay, why I sold EUR USD? Okay, EUR USD sell was for me a scalping move. It is not something that I am in for long. I am just here to catch a little small trade. So I got in at around here. I got in at around here, and I got out at around here. Okay, so my entry for DX for EUR USD was around somewhere around here actually. The break of this structure. You see how price came here 1, 2, 3, and when it broke the structure again, I got in for this sell and I got out somewhere around here. Okay, so I was in a sell, not M. I was. Okay, I was. I'm not currently in a EUR trade anymore. I was in a EUR trade. So even though it was going against what DXY is saying, because DXY is going on a downtrend, if DXY is going on a downtrend, by right, I should be getting in for a buy for EUR USD. But why did I sell the EUR USD? Because again, context is king. So in this context, I got in because it was such a short trade. I was just playing a short pullback. Okay, so context is king. You reference it if you are using it on the same time frame. Okay, so now that we know that DXY is on a downtrend, actually, we should be looking for a buy entry for EUR USD, right? We should be considering getting in for a buy entry for EUR USD because, give me a moment, because the DXY is already signaling to us that there is a possibility of a continuation here. Because if we are analyzing, just giving this a quick look, if this continues to do this, right? If it continues to do that downtrend movement, by right, the EUR should be doing this. But of course, we have to be on the same time frame, right? We have to be on the same time frame. So DXY is doing this downtrend and EUR USD is doing this uptrend, which is correct. That is the correct movement, and that is the correct way to use correlation. Okay, so do you guys see how I'm using DXY to help me make my decision when I am trading things like EUR USD? You can also do this on GBP, JPY, GBP, USD. Right? It should move the same direction as EUR USD, because when we talk about correlations, I would say GBP and EUR kind of moves in the same direction. There's going to be slight differences, but definitely going to be it's going to be like overall in the same direction. It's just in a smaller detail, it's on different scales. Okay, but yeah. So because DXY is moving a downtrend, on EUR/USD, we expect it to move on an uptrend. And actually, this is a good reference for you to look for a buy entry, but on a big time frame. Okay, not like I'm not telling you getting for a buy right now. I'm just saying that on a mindset, on a big general idea, you know that EUR/USD should be going up because DXY is going down, and XAU/USD you shouldn't be referencing too much on DXY for XAU/USD. Okay, so let's someone is asking, can you share your trade on XAU/USD? Yes, so XAU/USD is the only trade I'm currently in right now. I am in for a sell. I got in at around here. Here. I got in quite a few 2 days ago, okay, and I'm still in because I don't think the bottom has reached. I think it's gonna continue dropping. Okay, but on a smaller time frame, yeah, why do I think that XAU/USD is on a downtrend? Because I am an Elliott wave trader. I am a technical trader, and if I use Elliott wave to do my analysis on XAU/USD, right? Where's Elliott wave? There you go. This should be doing A, B, and C, okay? A, B, and C. For those who don't understand what I'm talking about, that's okay, because Elliott wave is not something you can master overnight, okay? If you've never even heard of Elliott wave, yeah. My forecast for gold, okay, on the very long run is that it will eventually stop here. It will pull back to 3,100, okay? But on a short term, I'm talking about in the next few days, it should be able to pull back to 1,800 area, okay? 1,800 area, okay? But that's just based on my own analysis. Again, I could be wrong. Please take me with a pinch of salt. So what I think is going to happen for gold is this. It's going to do a large A, followed by a pullback of B, followed by C. Okay, sorry, it's gonna be way, way deeper than that. So we're talking about this, something like this. We're gonna do A is going to end somewhere here, and then later on you'll see gold trying to pull back, do a pullback to a higher end, and then a C. Okay, but again, that's just my own analysis. Please, again, I'm not a signals group. Take me with a pinch of salt. I'm just sharing my brief analysis on what I'm doing with gold and why I'm in gold. So to cover today's topic and to stay on topic, right? That's exactly how you can reference DXY. But for my case, okay, I don't know about other traders. I'm purely sharing my own experiences. Other traders may do it differently. I purely only reference DXY for EUR/USD. And I reference it a lot. Why? Because I trade EUR/USD a lot. I almost trade it every week. Okay, I trade EUR/USD a lot, I trade gold a lot, and I trade ETH/USD a lot. Okay, so I will reference DXY a lot because I'm trading EUR/USD. Whether you want to use it to reference for other currency, you can. I just personally don't think the correlation is that strong. Okay, I personally don't think the correlation is that strong. Okay, so that's all I have for you guys today. Right. Thank you for joining my webinar. Okay, next Tuesday, we're gonna have another topic on the economy. Any topic on the economy. I can't remember what I scheduled on it, but I'm definitely gonna cover something on the economy, something on macro or microeconomics, something to do with geopolitical tensions, something like that. Commodities maybe, and currencies. So I will see you guys next week. Okay, I hope you took something away from my webinar. I hope you learned something from today's webinar. And yeah, you can follow Vantage on Facebook, Instagram. This is actually X now. I should probably change this photo. This is X, okay, not Twitter. you know, X, okay, and LinkedIn and Telegram. So I think Anwar, right? Anwar was asking about Telegram group. I personally don't have a Telegram group, but Vantage has a Telegram group that you might want to follow. Okay, that's all I have for you guys today. Take care, guys. I will see you guys in a week. Bye. Bye, Gula. Bye, Karsten, Brian, Muhammad, another Muhammad, Mary, Muhammad Jomat, Thessalonica, Brian, and the rest of you. Okay, bye. Take care. See you guys in a week.